How did Scott Bessent stack up as a fund manager? Exclusive Austria's half-century bond with Gazprom ended by gas seizure, sources say. How did Scott Bessent stack up as a fund manager? Exclusive Austria's half-century bond with Gazprom ended by gas seizure, sources say. How did Scott Bessent stack up as a fund manager?
Kiwi dollar US dollar jumps above 0.5850 as US dollar slides further. RBNZ policy in FOCO.
Exclusive Austria's half-century bond with Gazprom ended by gas seizure, sources say.
US dollar selling pushes the US dollar Swiss franc lower, but the 100 to 200 hour MA is stalling the fall. Euro pound rises 0.5%, more from pound weakness more than euro strength. Israel and Lebanon agree to terms of a ceasefire. Report. Belgian business confidence, 11.1 versus 12.8 prior. Gold declines after Bessent picked for Treasury Secretary.
U.S. dollar undergoes fade with markets tempering inflation expectations for Trump's presidency. Oil prices slip lower. Risk premium weakens on Israel-Hezbollah ceasefire reports. All right, happy Monday. How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So, lots going on today. I guess we should go through gold, oil, and Bitcoin. What do you stink? Smell like a plan? You want to do dollar pairs and yen pairs? I'd rather do Swissy pairs. But tell me what you'd like to do, and I will do my best to cover that. Okay, today we are using traders.com. Do our fundamental and technical and volatility analysis. You're also going to need a broker. I think you should have an ECN. With straight-through processing. They work for you, not against you. I think you need to get an ECN. Let me say it again. I think you should get an ECN. Trader's Way is the one I've been recommending for over 10 years. You should check them out, do your due diligence, see if they can earn your loyalty and respect by opening up a demo account and checking them out. Oops, wrong one. As far as this week, we have some news on Wednesday that'll move the market, part of PCE, in this particular case, personal income. Thursday, the U.S. markets are closed. Friday, I think they're open a half a day. So there'll be no morning live stream on Thursday and Friday. There is news on the calendar, but be careful, since the markets will be crazy thin. Stock market just opened. Okay. Currently, not a lot going on. Okay, yields have come down quite a bit. That's great. I talked about this in the fundamental session this morning. This was at 4.4 and now it's at 4.3. Very cool. And just quickly, since I've gone through all of these, I'm not going to go through them again. Just shows you be careful. Now, this morning I went through the COT report, and that was quite cool. I'm glad I did it. It was quite interesting. Again, I covered that in the fundamental trading team meeting that we did earlier this morning. I want to go to the dollar pair, the Swiss franc pairs. And we're ever so much closer to this zone, which might actually be a buying opportunity. What do you guys think about that? So we get to the test here, which is the Friday low, and we drop into a 15-minute chart. We're testing that now. So now what I would do, see, this is the open on Friday. If we're not going to make a lower low, then this is where the support is going to be. Okay, if it's not going to make a lower low, then this line is likely to hold. So it'd be very interesting to see what happens on the Swissy pairs. Okay, same thing with Aussie. Now it made it to the top, so let me remark that. Okay, yeah. Be interesting to see what it does now down between the 21.55. Pound Swissy has been down, but notice what it did. It did its M2 to M4. The pattern is over, so we've tested it a couple of times. I wonder if we can start climbing. Notice that we hit an M3, which for bears predicts an M1, but for bulls, you're going to watch around the M2. Neither here nor there. Really depends on what your outlook is for the next year. Okay, M3 held, Swissy strength. It is, Dakar, it is. Yeah, good call. Well, one thing that's, is quite, stark, the stark contrast, is, how low the yields are in Switzerland. Switzerland is doing all it can to make sure you have no good reason to buy the Swiss franc. But yeah, you're right. So we'll see. So anyways, M3 to M1 would be that downside move. Euro is a dog with fleas, but even it popped and recovered a little bit, or quite a bit even. Okay. And now we could even connect these lows. I thought that was just a wick. Yeah. Seems to be a little bit more than a wick. That's right. Yeah, it's not something that, I mean, there's no real incentive to sell, right, Dakar? I mean, that's the whole point. That is the whole point. So these could be setting up for you, okay? Okay. I want to say it again. Markets are closed on Thursday in the United States and half of Friday. And even then, I think the bond markets are closed. So be very, very careful this week. Could be extraordinarily thin volumes. Don't trade like it's just normal. It's not normal. And so abnormality is a risk. Okay. So there is a good chance, okay, and this is what technical analysis tells us, it helps us identify how decent the chances are, right? Probabilities. If it finds support between the 2155, then the top is likely to be around here, around 90. Okay. That's pretty basic. What you want to pay attention to is, what if it comes all the way down here? That's a game changer. Changes everything. This is right as rain. This is freak out. A freak out! A freak out! Yeah. So it seems like a subtle difference. Okay? But there's a massive difference between those two things. Hasn't happened yet, so don't freak out. Just be ready to freak out if necessary. Okay, so Swissy's strong today. And if you're fundamentally anti-Swissy strength, then you wait around to maybe buy some dips if it hasn't reversed. Remember, if it hasn't reversed, then they're pullbacks. But yes, there is Swissy strength at the end of the year. All right, let's look at some commodities. Okay, Bitcoin didn't have the guts, but we are on the 4-hour 21, which is what? The daily 5 EMA, bro. So you have to decide what your play is. If you sold it off the top, your target is down here at 88 and a half. If you're going to buy the dip off the 5 EMA, we are on our way to 107. 107,000. Which one is it going to be? That's it. Now, retail is heavily long. Institution is 50-50. Maybe 55-45. Well, it's more of the issue of the swing trade as well, Sky Killer, and filtering with your fundamental bias. If you think this is going to go to 120, then that whole zone is buyable. Okay. Yeah, at the 21, but that takes you out of the picture for weeks. Right? So it's more like if this little swing doesn't work, you back out and you let it fall down here. Right? And that's where you'd catch it at 88.5. So like I'm not overriding, okay, just Jessica's planning. What I'm saying is the way I can break it down, and there's no right or wrong per se. What I'm saying is there's a plan A. If this holds, you can try, and then you drop a stop, and then you manage the risk. And if it fails, you take a small loss. And then your next one, your plan B, would be way down here, which would be that 21. Yeah. So I just break them down into opportunities. Sometimes they're good opportunities. Sometimes they're mediocre opportunities. But it's pretty rare that my bias changes. Okay? So like we could have two traders of this, and one says the 100,000 was a major target and it's not going to go higher. It's a big psychological thing. We tried to do it. Now that's it. And, you know, we need reality to catch up with this giant theory of everything's going to be awesome next year. So some people might say, that's it. The 100K, we hit 99,200 or something. They're like, yeah, that's it. That's the top. Time to take profit. And down she comes for now, right? And this could drop all the way back to 70. So some people might have a theory like that. So that's what they would trade. You wouldn't buy this dip. But if you're like, dude, this is definitely going to 120, 125, 130, 135, 140, you know, you think, crypto's going to have an amazing 2025 as some of the regulations are going to go away, then this is cheap. And you might want to take stabs at it, right? Okay. Well, Sky Killer, if there isn't a reason for someone to take profit, then it's going to stay above the mean. So the big question is, was 100K the reason to take profit and revert back to the mean? Okay. Okay. That's all. And pulling back to the 21, as you can see, is very similar to just coming back to the mean. And then continue mission. So to me, the biggest part of this, of trading, is deciding what you believe, where we are going. Like, for example, a couple of weeks ago, I said euro dollar could fall to 80. Not to parity, not to 1, not to 98 or 97 or 96, 80. I said, why not? Okay. In particular, under what we believed at that time to be the likely Trump administration. Now, maybe things change and maybe this guy at the Treasury changes everything. I don't think so. I think the most interesting thing is Trump is going to make this new guy, what's his name, Bassett, in charge of the Fed in 2026 when Powell retires. And I think that's interesting because then you have a hedge fund manager. Now, you might say, well, that's what Powell was. No, he was private equity. It's different. Bassett understands global macroeconomics, understands capital flows of Wall Street, and is just straight up a trader, right? Like you and me. but he'd be running the Fed. Well, wouldn't that be interesting? Someone that is running the Fed from the market's point of view, like in Powell's term, he's going to go down as someone that was extremely late to the inflation party because he believed all the economic models, or at least he believed the staff that created all the economic models. But it'd be interesting for someone to make or try to influence Fed policy based on his understanding of real world capital flows, not just in Wall Street, but the global Wall Street, right? Sky Killer, I'm not disagreeing with you. I'm just saying in most situations, I'm not going to sell it because of that. I would let it fall and buy the dip somewhere else. And so for this week, I'm suggesting that if you were going to be a bull, because I don't know the future, so I'm not saying you can't. If you're going to be a bull, there usually isn't an opportunity like this, right? Okay, Sky Killer, no problem. I'm just saying, like, if you were going to try, this is valid. Now, there might be other reasons why, well, it's overbought and all that kind of stuff. I'm like, but you know what? All of this was overbought and it still went up. So this is a legitimate opportunity. Each one has its own risks, of course. Every opportunity has its own unique risks. There are several here, like, we are 2 standard deviations above mean. Great. It just means people have been buying the heck out of it. So you could, one more time, especially if you thought the psychological level of 100,000 is just a bump on the super highway to 200,000. Okay? Okay, if that fails, you're going to take a small loss and you take a walk. That's okay. That's how trading goes. Your second one would be somewhere down in here, 88.5. And you buy it off of the swing bottom, daily 21 as dynamic support. And we take it north next week, which I've already analyzed, usually is an up week anyways. But again, so like at, just in case you don't know, y'all, when you go to fundamentals and then you click on seasonality, okay, we have a scanner now that'll tell you week by week, month by month. And so you could look at it and say, next week's actually a good week for Bitcoin. Cool. So maybe you buy it this week. You see? So we're already thinking 1-2 weeks ahead, but I'm also thinking about December too. So, yeah, so this might be an opportunity. This might be an opportunity. And that's it for this week. The other stuff we'd have to wait till December. But I'm not interested in next week. I'm interested in this week, right? So I've identified 2 prices in which I could decide to buy. So now we're on this central pivot, daily 5 EMA, and now I could be waiting for scalps on this time frame. Okay, you see we just hit the line in the sand. Boom. Look at that. Boom. Boom, shalaka-laka. Okay, what do you think? Quite a coincidence, huh? Yeah, ha, 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 ha. Look at that on a 1-minute chart. Right? Insane in the membrane. Insane in the brain. I'm naughty by nature, not because I hate ya. So anyways, interesting. So that's how you set it up. That's where you might take a small loss today if you end up getting in. And of course, the bearish re-entry is right here. Okay. So all I'm saying is bulls buy low, not lower lows, unfortunately. And bears sell high. And you have a tool to help you with all of this now. I hope you're playing around with it. It's so fantastic. So bulls buy low, bears sell high. And this tells you the definition of low and high based on what these assets tend to do this time of day. So if you were a bull on pound Swissy, you should be buying right now or prepared to buy. Okay? You should be prepared to buy. Doesn't mean you should buy, but you should be prepared to. Again, what is this answering? Bulls buy low. Well, what's the definition of low? That. Okay? Right there, my friend. How does that make you feel emotionally that you can actually put very specific numbers down now? It's cool, right? I hope you see the power of that. There's hundreds, if not thousands, of candles in this calculation. Thank you, Keefe. Okay, so we just had that collapse in Bitcoin from the 4-hour top to the 4-hour bottom. It just depends on your bias. Are you a seller at the top or at the buyer at the bottom? That's all this is. Okay? And if you're like, man, all it's doing is looking at the top and the bottom. No. It's looking at dozens and dozens and dozens of tops and bottoms on this time of day. Okay? Well, it's your lucky day, Lucky. So I've become a bear on oil, and this was my sell zone earlier today, and has already collapsed below support on our way to a daily target. 69.37? 68.37 by tomorrow. Okay? On our way to 68, all the way back to the bottom of the range. Is that right, Jordan? Yeah, well, I hope you get funded. Yeah, unfortunately, most of those combines are designed to make you go for it, which means you're trying to hit home runs all the time. You always have the driver out, no matter what. And eventually what happens is, that kind of that level of risk is just unsustainable, and it's designed to be that way. If I started a prop firm, it would be low risk, slow and boring trading. Conservative from the get-go. Designed for you to succeed, not fail. So, anyways, Jordan, I don't mean to speak poo-poo of your opportunity. I hope you crush it, and I hope you make a ton of money. Good. The thing is, Jordan, and this is just sort of the standard operating procedure. If I said something like that to a Forex trader, I know you're doing futures, but if I said all you have to do is make $3,000, and they're like, cool, I can do that. And I'm like, you have to use mini lots or smaller. And they're like, dude, well, that's like 3,000 pips. I'm like, yeah, that's right. Instead, of course, what most people would do in that situation is use standard lots and just make 300. Well, 300 should just be one pissy little trade, right? But inevitably, most people will just lever up. They don't even think they're over leveraged. One of the things I proved to you guys earlier this year, I don't know if you guys remember, I made more than 10% in a month. Does anybody remember this? Maybe around March or April, I made something like 10 or 11% in a month. And I did it on something like 6 trades with mini lots. And I was very disappointed because that wasn't my goal. And what it proved is even with mini lots, I was over leveraged. With something like $35,000 in the account, and I was using mini lots, and it was 6 or 7 trades, made 10%. I'm like, holy crap, that's not what I'm trying to teach. What I inevitably showed you, and it wasn't my goal, is that even a mini lot at this size of account is too big of a trade. That I should be trading, let's say, 3 micros, not 1 mini. Yeah. And of course, so now when you go into these combines at quote unquote prop funds, which they're not actually prop funds, but whatever, we'll call them prop funds. Well, the interesting thing is they set it up so that you are extremely over leveraged. Extreme, like way, 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 way. Like it's just not going to work. But they know that, of course. So I hope you get her done. No, Andrew. I did do well on that one. I gave an example trade and I shorted pound yen and made 2,000 pips in a week. But that wasn't a big deal. No, it was earlier. It was just like nothing. Like it was, yeah, I had 6, 7, 8 trades. And I don't remember. There wasn't like one giant home run. No, they were all like, I don't know, they all made 300 or 400 pips or something. But percentage wise, it's too much because, you know, I aim for 2%. You know, 2. So if you're up 10, you've done something wrong. My pension fund does, you know, not quite 2%, 1.5%. It's we've had 2 losing months this year. One was 2.5 and one was 2. And we've had 10 winning months, somewhere around 1.5. Sometimes it's a little less than 1.5. Sometimes it's a little more than 1.5. But when you're doing that and you're growing, you're compounding. You know, 2% a month is more than 24% a year because you're compounding. So if I can find a way, which I have, to have lower risk and still, in like extremely low risk, and still put in your 18 to 20% a year, you're doing very, very good. You're doing very good. And that's what I've always been teaching with Forex is that, dude, if you're doing consistently 2% a month, you are by far the best Forex trader in the world. But amateurs don't seem to know that. So if you were doing 2% a month as a Forex trader and you had a small fund of $100 million or more, you would be considered the best Forex trader in the United States that's managing a basic level of money. Now, I've seen CTAs, commodity trading advisors, that do Forex, and for a small period of time, they're doing 2% a month. But 6 months later, they're not at the top of the list anymore. Someone else doing 2% a month is at the top of the list. So like 2% shows you have to be doing extraordinarily well as a professional Forex trader to be doing 2% a month because your leverage is so low. An amateur's like, dude, I do 2% a day. Yeah, well, you're over leveraged. You wouldn't do that if you had $500 million. Now, if you did 2% a month on average for 3 years, not much more on the best months, not much less on the worst months, but you're averaging 2. Dude, you are so phenomenally good. And that's what I would try to, well, I've always tried to teach you, but if I ran a prop firm, that's what I would want for you. But I think a lot of these prop funds, they're like, well, on your combine, you should produce 10% in your first month. You're like, dude, right off the bat, you know what's going on. It's designed for you to fail. Right? Because 10% a month, you're doing like 140% a year return. which means, right, you can double your money in 7 months, but you could probably also go bankrupt in 2. Cool. Anyways, you heard me, right? Yeah, you heard me. Okay, good. Just a reminder. Think of it as a public service announcement, huh? Yeah. Okay, just looking at the lows, we're not quite testing there. We tested the highs, you can see, huh, on NASI. Isn't that nice? It popped on the open to the 4-hour implied high and collapsed. Well, that's why we have this information. I'll skip silver. We'll look for gold. XAU, XAME. And gold has collapsed into the pit of implied support. But that's just nasty, huh? Notice we're already a couple hours away from peak volatility. So this was your opportunity of the day. What this is showing you is that this was predictable. This move here was predictable based on what happens on Mondays. So again, you can see we peaked out 2 hours ago, right? 1, 2, more like 3 hours ago. 1, 2, 3, right? So boom, like right on schedule. And of course, these would have been higher back then, but they keep updating. And so now we've lost volatility over the last several hours, and it's all tightened up. And we're going to continue losing vol. And today was the best day to be trading gold. It's cool, right? Tomorrow's not going to be as good. Wednesday is going to be even less gooder. What's going on, Crisscross? Miggity, 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 mac, daddy. Let's go look for some patterns. We're going to ignore all the patterns that don't exist. Why look at a chart if there's no pattern? The second thing is I only want to see patterns I want to see. Huh? You get it? I only want to see what I want to see. So I've turned off many patterns. I've turned off key levels, Fibonacci patterns, consecutive candles, big movements, breakouts. Turn them all off. Okay? Right? So, I'm only looking at these. Well, Chris, I just did the implied volatility that says it's not likely to fall further. Well, that's not a question. If you have a question like that, that means you have no fundamental bias. And you have no no opinion on whether gold should go up or down. So that would be a terrible situation for you to be in. So let's take a look. Yeah, well, that you need to fix that. If that is actually the case, you need to fix that. Yeah. All right. Let's take a look. Let's do our SWOT analysis. Does anybody need the cards, the flashcards to memorize what these patterns mean? Now, I've turned off all the complicated ones, but I could add them back. I just have them turned off. Oh, there it was. It was just slow. Okay, good. So the link to the download is in the description below the video, but could somebody cut and paste it into the chat? So we can go through this. Okay, pound Aussie, strength, weakness, strength or weakness. Okay, opportunity or threat? That would not be how to trade it, Kevin. Right, this is an opportunity. Okay, so the opportunity is right there, Kevin, and you take it north. Okay, all right, Swissy, strength or weakness? Yes, Chris, but if you've analyzed volatility going back 24 Australian CPIs, it either doesn't produce volatility, or if it does, it doesn't produce a reliable, repeatable pattern. So it's not worth your time, Chris. It might be economically important, but it's not worth your showing up and trading it. Yes, strength. Opportunity or threat for Kiwi yen? See, Chris, I got deep data on everything. Opportunity, correct. Okay, Aussie dollar. Strength or weakness? Strength. So is this an opportunity for you or a threat? That's right. It's an opportunity. You buy it low and you take it up. See, you should be putting these on your charts. You should be going to your charts and looking at these for opportunities. Okay. USD yen. Strength or weakness? Weakness. Is that an opportunity or a threat? It's an opportunity. Now, you're already an hour late, but nonetheless, you should have shorted here, but nonetheless, there's room for it to fall further. Can you see how much time this saves you? You could have simply gone through all these charts yourself, your own charts, and many of these have already presented opportunities for you. It's not perfect, but it saves you time. So USD Kitty CAD, strength or weakness? You guys are not having fun with this, or is there a lag? You don't like this? Okay? This is weakness. So is this an opportunity or a threat? Well, Andrew throws in a little extra. First of all, if what did I learn when I went back to university? Answer the frickin' question. Right? The question was, who's it an opportunity for? Right? Well, when you say it's an opportunity for a bear, you're implying, well, it could be an opportunity for a bull. No, there are no bulls. Okay? So, Chris, you need to download the cheat sheet that's in the description below the video. And then you'll know. Okay? But anyway, so, Andrew, you need to think differently. Okay? Based on what your response, you're like, well, opportunity for a bull, but a threat. No, opportunity for a bear, but a threat to a bull. No, there are no bulls. This is a down move. This is a down channel. It's making lower highs and lower lows. There are no bulls. You have to erase that from your brain, Andrew. There are no bulls. So we don't need to worry about their psychology. There are no bulls. Who the heck buys lower lows after lower highs? Not a bull. Bulls buy higher lows after higher highs. Okay? There are no bulls. So you're either a bear or you're out. So if you're a bear, bears sell lower highs like that one, and they're going to take it down for a lower low. That's what bears do. There are no bulls. There's no ambiguity here. Well, it depends if you're a bull. No, it doesn't. Bulls do not buy lower lows. Okay? Bulls buy this. And then none of this looks like any of that. There are no bulls. But an amateur, of course, gets caught into that, and they're like, well, it might go up and might go down. No. No. What creates the high, let's say it does this. Okay? Remember, TRADARS in this part of the website is not thinking. It's not predicting it's going to make a lower low. It's saying, okay? It's saying if the downward channel continues, then that's the high and that's the low. If this channel continues. Now, if for some reason there's something on this chart that makes bears exit early, like this, and then it makes a higher high. Do bulls buy that? No, but it takes the bears out. And now the next opportunity is for a bull. Oops, wrong one. It was like this. Okay, now a bull would buy a dip after, we'll call that a triple bottom, then a higher high, then a higher low, but then this channel's gone. It's gone. It doesn't exist anymore. And now it would look a lot differently. It's like that, or maybe it'd be a different type of pattern, but it would be either consolidation pattern or a bullish pattern. It would no longer be a bearish pattern. But as long as it's got the potential, remember these are emerging, it hasn't made the lower low yet. Okay? But if it's going to make a lower low, then this is your opportunity as a bear. So the pattern is bearish, otherwise known as weakness. And this is a sell high opportunity, which that's what bears do. And the only thing to make this break, where suddenly, let's say it goes up instead of down, is something made all the bears get out. It still isn't an issue of bulls. And that's what I wanted to go back and make the point with Andrew. Even this part, right? Even if this happens with the pink, that's still not bulls buying. That's bears getting out of there, right? This would be bullish. Okay? Thank you, Chrissy. Okay. But you see how much time this saves you? You can just burn through all of these. Okay, yens look bearish. Why? They all have falling wedges. Okay, yeah. Euro Aussie. Okay, here's a good one. Here's a good one for practice, okay? Not for a trade, but for practice. Pound yen. Strength, weakness, opportunity, or threat. We're talking about this here. Strength, weakness, opportunity, or threat. So strength or weakness? Strength or weakness? So, Chris, the origin of a SWOT analysis comes from business school. And strength and weakness is an internal thing. What are the strengths of your product or your service? What are the weaknesses of your, right? What are the opportunities for growth? What are the threats through competition? So internal and external. It's almost a little bit reversed here, where strength and weakness is the general direction of the pattern. And then opportunity to threat is congruency or I guess maybe it's similar. General sort of absolute direction versus relative direction. So it's an issue of internal, external. I almost see this as external and this one internal. So the direction of the pattern versus the leg in the pattern. So like, does anyone know what a pattern like this might be called? As an example. Yeah, head and shoulders. So what direction does this suggest? Yeah, well, strength or weakness. To stick to the SWOT theme. Yeah, weakness. Okay, cool. So let's say it falls a little further. Okay. Okay, because that's what you would expect. And then what if TRADARS gave you one of these, an arrow up? How would we analyze this pattern? So again, you'd start strength or weakness. The general pattern suggests weakness. But after a lower low, we might be building towards an upward move. So if we've already identified this as the pattern itself being weakness, and the next leg of the pattern is up, is that an opportunity or a threat? So that becomes a threat. Now, if or when we get there, so let's say now we fast forward through the future and it does go up, okay, TRADARS might look at it slightly differently now, and it might say something like this. So would the gray arrow, looking like this, is that an opportunity or a threat? Yeah. You see, this is designed to create muscle memory. I want you to get in a habit of knowing how to read these patterns. Let's do one quick one and then I'll let you go. 4-hour chart, Aussie yen. Okay, I want you to do both. Does the pattern exhibit strength or weakness? And does the arrow offer opportunity or threat? Do both. What's your answer? Now, Chris, I want you to think of this. You have all the yen pairs, and all the Swissy pairs and all the dollar pairs and all the cross pairs. And you can go through the top 15 best opportunities, and you just write down right? You can go one by one or anything, but the idea is you know what to look at right now, and you also know what to ignore right now. And there's far more to ignore than for you to observe and to analyze. Now, we didn't do crypto, but we have crypto. We didn't do individual stocks, but we have individual stocks. We didn't do the commodities like gold and oil and silver. And we didn't do stock indices like DAX and ASX and Nikkei and the S&P 500 and the Dow and the NASDAQ, but we have it. Okay. Cool. We have that both technically and fundamentally. Oil is now down 2%. And I've been talking about it all day when it was at 71, that I'm a bear, and why, fundamentally speaking. And that's it's been working tickety-boo, huh? S&P 500 at 6,000. Oh my. So we did commodities, we did some crypto, we did some Swissy pairs, we looked at some dollar pairs, we did some technical analysis, get you used to knocking through, banging out SWOT analysis every morning, or a couple of times a day you should go through that. Notice that all these patterns that you went through today, you're getting them updated in real time. Like 37 minutes ago was your last good opportunity. Okay? So anyways, very, very, very interesting stuff. I hope you see that if you incorporate traders' technology into your routine, you have the data now to make solid technical and fundamental analysis. Oh yeah, we did implied volatility. Also, another time-saving thing, and this goes back to something that Chris said earlier. On Wednesday, we have personal income, which is part of PCE. That does move the market, and it does create patterns in predictable ways, and we've broken them down to if actual is less than or if actual is greater than. And we have all the big data. I can go back through all of these. Okay? So what does the 2-hour scalp look like on Eurodollar versus Aussie dollar? And we have all scenarios documented. If the actual is less than, 75% chance the 2-hour will be up. If it's greater than, 66.7% chance the 2-hour will be down. Okay? And you can say, prove it to me. And we can show you all the charts going back, okay? Going back through history, matching the scenario of hit or miss. Less than expected or greater than expected. We have it all documented. And we know the patterns, right? And so here's the thing that I'm getting at. Chris mentioned something about, Aussie inflation or something. And I'm like, yeah, but it doesn't matter. It doesn't matter. We might have it on this calendar, for example. And it is a news event. Okay? It is a news event. But how do you know whether you should pay attention? How do you know whether you should trade it? How do you know if it'll offer an opportunity for a trade or have no opportunity, or even worse, a trap where it seems to take off and then it collapses on you? How do you know? Well, you should analyze every scenario, even if it takes thousands of candlesticks data going back years. You should analyze it for pattern recognition. Okay? So the interesting thing is, well, that's nearly impossible, but we've already done it for you. So the cool thing is this calendar is full of news events, hundreds and hundreds of news events, right? Which ones actually matter? These ones under the news radar are the most tradable because they offer both volatility and reliable, repeatable patterns inside the volatility. So you can make somewhat of a prediction. Now, it's only past performance, so we don't know future results. But if you looked at scenarios of what does Kiwi dollar do if personal income in the United States is below expectation, well, we looked at all of those going back, well over a year, and you find out, well, 75% of that time, it went up. And here it is here, and here it is here, and here it is here, and we can prove it to you. And we can do that on multiple time frames. Like, it's ridiculous how much data we have. Okay? It's ridiculous how much data we have. It's just beautiful that we can just pull it up at any time. Okay. Well, it's not a screenshot, Chris. We calculate on the price and the time. So TRADARS doesn't subscribe to a charting service. But what we do have is the candlestick data. And from the candlesticks, from the data, we have the high, low, and close of every 15-minute candle on euro dollar going back 6 or 7 years, right? And from that, we can then say, well, when does personal income come out? And what did it do a few hours before and a few hours after? Well, actually several hours, because this is on the 4 hour. But if we go back, let's do something here. So, right. So in this case, we can say, show us a couple of hours of Aussie dollar price action before the June 28th, 2024 personal income month over month. And in particular, we know that the delta was greater than expected. So we wanted that. And then in that case of greater than expected, show us the candles after the news. And so this is what it did back here in June 28th on the 15-minute chart. And it was and then the news came out and it was greater than expected and it popped and then it moved sideways. And so we have that over and over and over and over again. But really all it is a database. It's not a screenshot. This is actually live. This actually moves. So what it's doing is we have the open, high, low, close for this candle, open, high, low, close for that candle, open, high, low, close. And then from that, we can generate a lot of different mathematical things, like something simple would be like a moving average, right? But we're also tracking the expected and actual news events and calculating the delta, and then remembering, did it go up or down, and then presenting these patterns to you. But more importantly, Chris, imagine when we get to this news calendar and you're like, dude, there's 100 things on the calendar this week, but only 4 of them are, well, actually there's quite a bit on Friday, but that's a dead day because of the holidays. But anyway, so there's only 5 or 6 out of 100, right? So 95% of the news didn't make it to this calendar. Why is that? Because 95% of the news this week doesn't produce a reliable, repeatable pattern in the market for you to make money. Well, it's not that. I mean, it might be that. If there's no volatility, then it's hard to make a move. But also, what does it do? What if it's like 50% of the time it went up, 50% of the time it went down? well, then who gives a crap? You can't predict it, so there's no value. But what if we showed you all the scenarios, Chris, where we're like, hey, there's 5 opportunities this week, and we can break it down better than expected, worse than expected, and the probability of direction up or down, and then be able to prove it to you on demand on multiple time frames for every single dollar pair. And plus, we would have had to have done that for the other 95 news events that didn't offer any opportunity at all. I almost propose that it's the 95% that didn't even make the calendar that's worth the value. And now you're only around with 5 opportunities to have a reasonable chance of making any money. Like, oh my God, like when you think of it, Chris, how many millions of candles is that? It's insanity. Yeah. So anyways, I'm designing TRADARS to be the complete package. Right now it does fundamental analysis, it does technical analysis, it does performance coaching, but I'd like to add a few other things into it. Maybe a prop fund. Since you guys seem to be interested in prop funds, what if TRADARS offered a funding opportunity? If you're making sound fundamental and technical decisions, why not have a prop fund that supports that idea? Now, if you're a degenerate gambler, I don't care. Go ahead and degenerately gamble. But if you want to really consider your trading as a professional business, and funding is an opportunity to scale, I want to be able to offer something like that, right? So that's the idea, is that TRADARS is a Bloomberg terminal for retail Forex traders. But not just Forex, obviously. Commodities, indices, even individual stocks, and, wink, wink, nudge, nudge, maybe even the options market. Wouldn't that be cool? So I really, really, really encourage you to use traders.com and become a small institutional investor. And 2024 is the last of the amateur retail trader. You don't have to be an amateur anymore. You can make institutional quality decisions. So say goodbye to the old amateur you, the amateur trader, and use 2025 to seriously step up your game and start trading institutionally. Doesn't mean you can't scalp. It just means you know what the heck is going on. Imagine every single trade you made was based on sound fundamental analysis and solid technicals. Okay? The machine doesn't make a mistake when it comes to the patterns. These are emerging patterns. Now, if they've already happened, then you've already lost about 50% of the value. Right? Okay, Peter, thank you for that. The volatility, which one? This one? Yeah, that's available. Okay. Pro subscribers have it. And News Trader, right? AKA the scalping team, has access to it. Yeah, it's been out for a couple of months, in fact. I just haven't done like a full, real big announcement or anything. But notice we have half as many high opportunities. We're already losing vol. And just to leave you with this, about 20 minutes ago, I showed you, maybe a half an hour ago, I showed you the NASDAQ was right down in here, and I talked about it, if you were a bull, being an opportunity to buy. And we hit the bottom of that range. And, well, if you are a bull, this is what you believe in. Is it going to happen? Well, we don't know that. But you had a solid opportunity, and it's now passed you by. Cool. So I'm excited for 2025. There's another update that I have to release, or an upgrade that I'm going to release to everybody. And then I really hope 2025 brings some major opportunities for you, in particular in ways that you can use our fundamental and technical analysis and our performance coaching. Typically, we do 4 or 5 hours a day of performance coaching. Like, oh my God, right? So I hope we find a way for you to use our platform. And then you change the way you trade in a very positive, professional way in 2025. I really hope that for you. And of course, I'm here every day for you. So peace on earth, may the pips be with you, may our profits be above average. Remember, strength, weakness, opportunity, and threat. Organize your thoughts and get out there and get her done. Oh, look at the bouncy bounce.